Let's circle back to our interview with the IMF Managing Director, part of our coverage of the Singapore FinTech Festival. Well, CNA's Elizabeth Neo spoke to Kristalina Georgieva, and they discussed the impact of artificial intelligence in the finance industry and how it could expose vulnerabilities, especially among developing nations.
This year's FinTech Festival in Singapore focuses on the growth and adoption of AI, but such technology can also create vulnerabilities and increase the inequality gap. How do you ensure those in lower middle-income countries are not left behind?
Oh, this is why institutions like the International Monetary Fund are important guests at the festival, which, by the way, is fantastic. Congratulations to Singapore for hosting it. Because we represent the interests of all our members, rich and poor, and we strive for solutions that bring more inclusion. And it is possible. We had, some years ago, embraced a fintech agenda that is specifically directed to banking the unbanked, to making sure that there is inclusive development in the world of finance.
CBDCs, for one, is also, a form of digital technology in the payments industry that can help the underbanked sectors. How do you think we can, further scale up and roll out this service to more nations, especially those who may not be able to afford?
What is so amazing is how much excitement there is about CBDCs everywhere. Today, there are 130 countries, some of them small, poor countries, that are exploring CBDCs. And in fact, the first country to have CBDC is the Bahamas, not a big, rich country. Why did they do it? Because it is expensive to distribute cash to many islands and remote communities. CBDCs, in fact, can be a big factor in cutting costs of financial services. They can make it easier for people who were left out to connect to the financial system. But of course, that can only happen if the design and then the implementation of this design is with the objective of inclusion.
Building on the point you talked about, oil prices, there is a risk of oil prices shooting up further, even though it's sort of calmed down some now, complicating the whole global inflation fight. I think that's not even, out of the picture at this point. And IMF is of the view that central banks must avoid premature easing. Well, given that we are in a vastly different economic situation, would such an approach still work?
Well, the most important thing to remember is that when inflation goes up and stays higher, that leads to poor families being affected the most, and also it worsens investment and consumer ability to participate more actively in the economy. So inflation is bad for growth. And this is why it is so important that inflation is brought down to a level where the economy can again do better. This being said, central banks have done a good job. In 1 year, inflation dropped to half of what it was. It was about 11%, now is slightly over 5%. And that is because actions have been taken. But central banks watch data carefully. And if data tells them you have to stay put, inflation is not where it should be, they need to follow. If data tells them that conditions are changing, they, of course, would respond to it.
And indeed, central bankers have their work cut out for them. How can central banks balance taming inflation with supporting economic recovery and also deliver social support and structural transformation?
So the job of central banks is price stability. And that is what they are focused on. They need to bring us back to a place that is good for growth and good for the poorer parts of the population. It is the job of finance authorities to pay attention to who is most severely impacted And they also have done a fairly good job providing support to vulnerable parts of the population. But they have a tough job today. Why? Because COVID and then the war in Ukraine and then a cost of living crisis, they have pushed countries to exhaust their fiscal buffers. There is no space. So now they have to rebuild fiscal buffers and help with the fight against climate change and pay more on the debt they have accumulated. So I don't envy them, but I know that there is a good understanding that monetary policy and fiscal policy have to help each other. In other words, fiscal policy has to be careful not to throw too much money because then inflation may go up. And monetary policy has to watch it when conditions are right to start moderating what has been a necessity to fight inflation.
Picking up on something that you talked about, debt. I mean, something that the world is also watching closely is those rising debt levels, and economies, they are likely to take on, a heavier fiscal burden because of how things are. We have aging population in many countries. The climate transition is costly. Not every country can afford to do it. What is a sustainable way for governments to replenish their fiscal buffers in a way that does not add to debt or, continue to contribute to debt finance spending?
There is no magic. What governments need to do is make sure that they collect revenues. In some countries, there is quite a lot of space because of tax avoidance to increase revenues to meet the needs that you described. And then they need to prioritize public spending and be very efficient how public money is being used. It is also very important to recognize that when the economy grows, then there is more in tax revenues. So this is why winning the fight against inflation as quickly as possible is so important, so central banks can ease the pressure they put on the economy with higher interest rates. In other words, we need policy coherence. We need responsible behavior of all policymakers in this very difficult time. And we also need the public to understand that it is tough time. And we have to, as societies, to be supportive of changing the course to better performance of our economies.